welcome to The Trade. Before we get into the charts that matter, let's take a look at what traders are watching out there. We have seen Russian and Syrian jets strike the rebel-held city of Idlib in the second day of intensive bombing in northern Syria aimed at pushing back insurgents who've swept through to the city of Aleppo, according to Syrian army sources. US President-elect Donald Trump demanding that BRICS member countries commit to not creating a new currency or supporting another currency that would replace the US dollar, or they may face 100% tariffs. The Taiwanese President Lai Ching-te says that war has no winners and peace is priceless. This on a trip to the US in Hawaii that has angered Beijing. Lai made the sensitive two-day trip to Hawaii on the way to 3 Pacific Island nations that maintain formal ties with Taiwan, which China claims as its own territory. And gold prices have been boosted by a drop in dollar and persistent geopolitical tensions. However, the price did have its worst month since September after the post-election sell-off driven by Trump's win, and coffee prices settled lower on Friday after hitting their highest in nearly half a century during the season. Let's get into the technicals now. Louise Bedford from Trading Game joining me. We are looking at potential records being hit on our market. Louise, hi.
We are, aren't we? And it's very exciting. So many traders have done so well over the last few weeks.
So what are you seeing in terms of what the charts are showing you, particularly when you look at the All Ords?
Look, the All Ords has been trending beautifully. What we've got is a fantastic change of polarity. You can see that circled with the top red circle there. It burst through its layer of resistance, came up and then down, rested on it as a support line, and then up and away, which is fantastic. We've got very low volatility at the moment, 1.96%. So anything over 5%, that's when things are really hotting up in terms of volatility. And the facts at a glance, we've got 5 hot sectors, 9 cold and 3 in limbo. Now, to dive into those details, come and get your free special report that I produce for every single AusBiz person, tradinggame.com.au/hot or not.
All right, we love that you do that for us, Louise. Let's jump into some of the technicals though. Have a look at the top 20 stocks. What are you seeing there, hot or not?
Well, these are actually cold. What is quite interesting here is that we have got a mixed bag in terms of, are these shares large or small? So the ASX 20, that is not where you want to be other than a few choice sectors. And if we look at the ASX 100, this is in limbo. So what that means is that we're not hot, we're not cold, we are just waiting for another signal. And the ASX 300 is actually cold. So where is the action coming from? It is coming from those shares that are underneath the top 300 in specific sectors for you to act on, very focused in terms of your views, very sure of yourself in terms of the particular trades that you're going to take. This is not an across the board, everybody celebrate, we're going up and up.
When we look at whether or not we're going up and up and up, if we look out more broadly and go from the 20 to the ASX 100, what is that showing you?
Well, because we've got the ASX 100 in limbo, we're not even quite sure whether we should be involved with those. I'd be focusing on underneath the top 300. And specifically, if we have a look at information technology is extremely hot at the moment. That is one of our hottest sectors. And the next chart, which you'll be able to see, which is energy, that is one of our coldest sectors. If we look at industrials, which will hopefully be in the next couple of charts, that is actually in limbo. So how can we make a buck out of the market at the moment? I think that is the key. What we need to do is we need to look at ETFs over indices. And when you have a look at the NASDAQ and the S&P 500 down the track, we'll have a look at those in just a moment, they are outperforming the Australian market. So if you had a look at ETFs such as STW and IOZ. They are two Australian-based ETFs that you can use to capitalise on the Australian market to give you a good spread of diversification, and that also you're capitalising on an index trade which has an upward momentum bias, because in any index they take out the ones that are not performing, they keep on adding ones in that are performing, so you do have that upward pressure to keep on going up. So I would be looking at an ETF strategy for the Australian market.
When you say looking at what the Nasdaq has done, I mean, I think the Nasdaq was up something like 6% in November and up the most since May. Obviously looking very hot there. Does that continue?
Well, this is the question, isn't it? But you know, the good thing with ETFs, because you do have the ability to take on the index as a whole, you can actually use ETFs such as NDQ and SNAS, which has got a leveraged view of the NASDAQ. They are Australian based, so you don't end up with a lot of paperwork, and you can capitalise on a time of either continued strength with the NASDAQ if you feel that it's going to continue on, or even a time of temporary weakness because of that upward bias with the indices.
The S&P 500 also at or near these records, had a great month as well, up 5.7%. I'm guessing that's hot too.
Yes, it is hot. It is definitely hot in relation to the Australian market. Now, what are some specific strategies that you could look at with the S&P 500? You could look at the IVV ETF and the QUS ETF. Now, both of those are Australian based. They are something that you can trade from here, appealing to those people that don't want to have those late nights or that extra paperwork with a US share, but you are capitalizing on the S&P 500 upward trend. So if you see this as continuing to move up, sure, you can do individual shares, but I'd also investigate ETFs to be able to capitalize on that index upward momentum.
And finally, Louise, what's the FTSE telling us?
Now, the FTSE, it does make me laugh with this one, because look at that sideways movement. Absolutely ideal for call option writers. Now, the volatility has come down a little bit, which means that call option writers aren't likely to get paid as much as they were getting paid a few weeks ago. However, the good news is, with that very cemented line across the top, anything above that line is prime territory for call option writers. Pick up a little bit of money here and there on a monthly basis, something that I did for about 3 years after I left my real job and became a trader. So it is something that you can definitely capitalize on if you're familiar with writing options.
All right, Louise, always great to chat. Have a great week. Louise Bedford there from The Trading Game. And that does it for this edition of The Trade. Be sure to join us again next time.